Hello everyone, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. From this video onwards, we are going to start revising the profit and gains of business or profession chapter, or as we all call it, the PGBP chapter for CA Intermediate Income Tax syllabus. Okay, but as usual, before beginning the lecture, my request to you is to like this video, and if you haven't subscribed yet, please subscribe to this channel and share it with your friends also, so that more and more students can get benefit of these revision lecture series. Okay, now without further ado, let us begin the revision. So we are going to revise the PGBP chapter. This PGBP chapter is the chapter number unit number 3 of chapter number 4 in your institute study material, and in my notes it is chapter number 9. Firstly, let us start with the definition of business and definition of profession. So definition of business is given in section 2 clause 13, which tells that business includes trade, commerce or manufacture, or any adventure or concern in the nature of trade, commerce or manufacture. Then what is profession? Profession is given in section 2 clause 36, where it is told that profession includes vocation. So normally what we mean by profession, that is definitely profession, but profession also includes vocation. Vocation is any occupation that requires a special knowledge. Now let us see what is meaning of profit or gain as per PGBP chapter. Number 1, profit can be in cash also, or it can be in kind also. Both are considered as PGBP. So if at all I receive a profit in kind, then I should take the cash value of that kind. For example, if a client has given me a laptop worth rupees 1 lakh as my fees, then my profit is going to be how much? 1 lakh rupees. Okay. Next, capital receipts are taxable under PGBP only if it is specifically provided under PGBP chapter. Then voluntary receipts received in the course of business or profession will also be considered as PGBP. For example, a lawyer is getting money from beneficiary and a lawyer is getting money from client, that is definitely PGBP. But if some other person is also getting benefited by the services of lawyer and giving money to the lawyer, that is also PGBP. Then applications of gains is immaterial. For example, if I ask my client to not give me the fees but to give the entire money to charity, then also that entire money will be taxable as PGBP, because giving to charity is application of money, it is spending the money. So whatever money I am receiving will definitely be told as PGBP. Where I spend the money does not matter at all. My income will be treated as PGBP. Then income can be legal income also, illegal income also. So even if I am having a business of kidnapping, that income will be taxable under PGBP. Okay. Next, PGBP is the aggregate of profits of all businesses. So it is not necessary that only one business should be considered as business and other business should be considered as other sources. Okay, that is not the concept. What is the concept? A person can have more than one business also. Okay, in such case, find out the profit of each and every business, then add all the profit together. The entire amount is called PGBP income. Okay, so it is the aggregate of profits of all the businesses. Then profit means net profit and not the gross receipts. However, the net profit you have to find using the rules that are given in PGBP. Okay, by using the computation section. So firstly, let us talk about charging section, section number 28. As usual, every head of income has a charging section and a computation section. Charging section is given under section 28. And what are the points in charging section? Let us see. Number 1, income from business or profession. So first point itself is what? Income from business or profession is called PGBP. What is second one? Any compensation or any other payment due to or received by, number 1, person managing the affairs of an Indian company or Indian affairs of a foreign company. I gave you an example of director receiving sitting fees from a company. This will be covered under PGBP. Number 2, agency or termination of agency. So if I am doing agency, that will also consider PGBP, and if my agency is terminated and I am receiving any money, that is also considered as PGBP. Next, if I am receiving money from the government, for example, for some government contracts, then the money received is also considered as PGBP. And last one, if any business terms are either terminated, means cancelled, or modified, then for termination or modification, if I am receiving any money, that is also PGBP. Next, if there is any trade, professional or commercial association and such trade, professional or commercial association is giving service to its members and receiving the money, then the money received is called PGBP. Okay, I gave you an example of Codicia when I was taking the classes. even Sidco, I told you. Next, export incentives. What is export incentives? Any incentive received for the purpose of export. So if either the export incentive is sold and profit is received, or any export incentive is directly received, both are considered as PGBP income. What are the export incentive? Number 1, profit on sale of import entitlement, profit on sale of duty entitlement passbook scheme, profit on sale of duty free replenishment certificate, then cash assistance received against exports, and then duty drawbacks. Next, if you receive any benefit or perquisite related to the business, then also it is considered as PGBP. I told you that my company has given me a free trip to Maldives if I sell 1 lakh laptops of the company. Okay. Next, if a partner receives any remuneration from a partnership firm, that is also PGBP. It is not salary, because partner is not the employee of a partnership firm. Partner is a part owner of the partnership firm. Next, sum received for not carrying out any activity. So if I am receiving any money for not carrying out any activity, that is also PGBP. And sum received for not sharing any know-how, patent, copyright, trademark, etc. is also PGBP income. Then if I receive any sum under Keyman insurance policy, that is also PGBP. See, Keyman insurance sum is actually taxable in three different types of head. If the employee is receiving Keyman insurance policy money, then it will be taxable under salary head of income. If the employer company or employer assessee is getting the money, it will be taxable under PGBP. And if any other person is getting the money, it will be taxable under income from other sources. Okay, so this was the charging section. Now before going to the computation section, let us discuss about accounting aspect. So section 145 subsection 1 speaks about accounting, and it says that for PGBP and IFOS, that is profit and gains of business or profession, and income from other sources, the assessee definitely needs to follow either of two methods of accounting. So what are the two methods of accounting? Cash system and mercantile system. Cash system means payment basis of accounting. Mercantile system means accrual basis of accounting. Payment basis and accrual basis. However, for two types of incomes, no need to follow method of accounting. For two types of incomes, no need to follow method of accounting. What are the two types? It is given in section 145B, and the two types of incomes are: number 1, interest on compensation and enhanced compensation, and number 2, subsidy or incentive, etc. received from the government. So for these two types of incomes, they are always taxable on receipt basis. You need not see method of accounting, always taxable in receipt basis. Okay. Next, section 145 subsection 2. All the assessees have to follow compulsorily income computation disclosure standards, ICDS. They have to follow what? ICDS. It is nothing but accounting standard, but for income tax purposes. However, for CA intermediate, it is not there in the syllabus, so you need not worry much. Just know that all assessees have to follow ICDS. But who are the two types of assessee who need not follow ICDS? Number 1, any individual or HUF who is not liable for tax audit under section 44AB need not follow ICDS. And number 2, any assessee who is following the cash system of accounting also need not follow ICDS. Hence, ICDS is applicable only to mercantile system, not applicable to cash system. Okay. Now let us come to section 44AA, compulsorily maintaining books of accounts. First and foremost, if at all you are required to maintain books of accounts, for how much time you should maintain books of accounts? Answer is: maintain the assessment year books of accounts, maintain the previous year books of accounts, and 6 years preceding the previous year also we have to maintain the books of accounts. Next, section 44AA subsection 1 gives a list of the professionals, and those professionals are compulsorily required to maintain books of accounts. Who are the professionals? Number 1, legal, then medical, engineering, architecture, accountancy, which includes chartered accountancy, technical consultancy, interior decoration, film artist, and director, actor, singer, composer, all are there in film artist. Okay. Company secretary and information technology profession. Let me repeat it once again: legal, medical, engineering, architecture, accountancy, technical consultancy, interior decoration, film artist, company secretary, and information technology profession. So all these are professionals who are compulsorily required to maintain their books of accounts. Then section 44AA subsection 2. Apart from these professionals, who and all are compulsorily required to maintain books? Let us see. First and foremost, let us talk about individual and HUF. So if individual or HUF who is having an existing business, means the business which was there in the previous year or before the previous year itself it was started, okay, then for such business, if the income is more than 2,50,000 or turnover is more than 25 lakhs in any of the three preceding previous years, that means even if one is satisfied, then that individual or HUF is compulsorily required to maintain books of accounts. And then if it is a new business or profession, what is new business or profession? It means that business or profession started during the previous year itself. In such case, if the income is likely to exceed 2,50,000 or turnover is likely to exceed 25 lakhs, then also the assessee has to compulsorily maintain books of accounts. Okay. Next, for all the assessees other than individual or HUF, what is the limit? If the income is more than 1,20,000 or turnover is more than 10 lakhs in any of the three preceding previous years, in such case they should compulsorily maintain books. And if it's a new business or profession, if income likely to be more than 1,20,000 or turnover is likely to be more than 10 lakhs in the previous year, then also they have to compulsorily maintain books of accounts. Next, if a person has violated or is showing less than the presumptive income under section 44 ADA, section 44 AE or section 44 AD, then also they have to compulsorily maintain books of accounts. And not only that, if a person has come out of 44 AD, then for the next 5 years also he has to compulsorily maintain books of accounts. Okay, now comes the question, what books of accounts should be maintained by the assessee? Answer is such books of accounts which will enable the assessing officer to determine the total income. What are the books of accounts? Such books of accounts which will enable the assessing officer to determine the total income. However, if for all the professionals referred under section 44AA subsection 1, that is what? Legal, medical, engineering, accountancy, all those professionals, okay, if at all their gross receipts is more than 1,50,000 in all the three preceding previous years, or in new case of new business or profession, it is likely to exceed 1,50,000. In such case, such professional should maintain prescribed books of accounts. Okay, be clear with the difference. Generally, all the professions should compulsorily maintain books of accounts. Such books of accounts which will enable the assessing officer to determine the total income. However, if in all the three preceding previous years, okay, if in all the three preceding previous years the income is more than 1 lakh, gross receipts is more than 1,50,000, or in case of new profession the gross receipts is likely to exceed 1,50,000, in such case they should maintain prescribed books of accounts. What are the prescribed books? It is given under rule 6F, and the prescribed books are cash book, journal, ledger, all the sale bills more than 25 rupees, and all the purchase and expense vouchers more than 50 rupees. Okay. Apart from that, if a professional is a medical professional, he also should maintain all the above plus a daily case register, of which the format is given in form 3C, and inventory of medicines as on the first day and last day of the previous year. Okay, now comes the question, sir, where to maintain the books of accounts? Answer very simple, maintain in the principal place of business. Maintain books of accounts in the principal place of business. Now let us talk about the computation section. We have finished the charging section. Now let's come to computation section. Computation section is given under section 29, and it is very simple. Computation section of PGBP tells that follow section number 30 to section number 43D. What should we do? Follow section 30 to section 43D. That's it. Now let me talk about an important concept. Okay, in PGBP, see Kanna, certain incomes are allowed as deduction, certain incomes are not allowed as deduction. Okay, so there are two methods, main methods by which they can ask you a PGBP question. One is what? Direct method, and one is what? Indirect method. In direct method, what will happen? The question will give you a list of incomes and it will also give you a list of expenses. So whatever income is taxable under PGBP, you add them. Whatever expenses can be claimed as deduction, you reduce them. then you will get the income under PGBP. But this is very simple. Hence, institute generally asks the tougher method, and that is indirect method. In indirect method, what will happen? The exam question will give you net profit, and from that net profit you have to do reverse calculation to find out the PGBP income. Reverse calculation. Now listen very carefully, very important, because here you can make silly mistake. So how to do reverse calculation, sir? Number one, firstly, let us see all the transaction. So let's say A is a transaction where the income as per P&L account is 70,000, but as per income tax it is an exempt income. So what should we do? If in P&L account it is given as income, it means it would have been added in the profit, correct? It would have been added while finding out the net profit. But in income tax it is not considered as an income. So now what you should do? You should reduce it from the net profit. Hence you should reduce that 70,000 from the net profit. Then next, B. B is a transaction of 50,000 rupees. It is considered as income under PGBP and it is also taxable under income tax law. See, if a transaction is an income under profit and loss account and is also taxable under income tax law, then what you have to do? You need not do anything, because while calculating the 65,000 net profit, already it has been considered as an income. Hence what you should do? Ignore such transaction. Fine. Next. Now let's come to transaction C. Transaction C is a income of 20,000 as per profit and loss account, but in income tax law 25,000 is taxable under PGBP. Hence, since while finding the profit 20,000 has already been considered as income, so now what you should do? The remaining 5,000 rupees you consider it as an income now. Hence 5,000 rupees you add it to the net profit. Next transaction, transaction D. Transaction D is an income of 30,000 as per P&L account, and as per income tax only 10,000 is taxable in PGBP. So in P&L income is how much? 30,000. As per PGBP income is how much? 10,000. So the difference of 20,000, what you should do? You should reduce it. You should reduce it, because 30,000 has been added, but you should add only 10,000 in PGBP. That is why reverse the 20,000. Hence reduce the 20,000. You get my point? Next, there is an item E which is 5,000 in the profit and loss account, but in PGBP it is not taxable. It is taxable in income from other sources. That is why what you should do? Reduce that 5,000 from net profit, okay, while calculating PGBP income, and add that income in income from other sources head of income. Fine. Next, transaction F. Transaction F is a transaction that is taxable under PGBP, but it is not mentioned in the P&L account. Since it is not mentioned in the P&L account, it will not be present in the net profit. So now what you have to do? You have to add it to the net profit, since it is a taxable income. Okay. Next, let us see transaction T. Transaction T is a allowed expenditure of 15,000, but it is nowhere mentioned in the profit and loss account. Since it is not mentioned in the profit and loss account, it would not have been reduced while calculating the net profit. So now what you have to do? You reduce it. Since already it was not reduced, so now you reduce it to find out the PGBP income. Next, transaction number V. Transaction V is a expense of 5,000 which is there in profit and loss account. However, this expense is allowed as a deduction in capital gains chapter and not PGBP chapter. So now what you have to do? Add it back from the profit in PGBP and reduce it as a deduction under capital gain chapter. Next, transaction W. Transaction W is a item of 10,000 in P&L account. However, in income tax it is not allowed as deduction. Not allowed as deduction. Since it is not allowed as deduction, so now what you have to do? You add it back. You add it back. Fine. You have to reverse the transaction. Hence you add it back. Transaction X is an expense of 25,000 in the profit and loss account. However, only 10,000 is allowed as PGBP. 20,000 has been reduced while finding the net profit, but you should reduce how much? Only 10,000. So balance 15,000, you add it back to reverse the transaction. You get my point? Next, transaction Y. Transaction Y is a 30,000 expense in P&L account, and the same 30,000 is also allowed as an expense in PGBP chapter. So now what you have to do? You need not do anything. Just ignore it. Just ignore it, because while finding the net profit, already it has been reduced. Okay. Next, transaction Z. Transaction Z is 40,000 as per profit and loss account. However, 50,000 is allowed as deduction under PGBP. Hence, while finding the net profit, 40,000 has been reduced. But in PGBP, how much you should reduce? 50,000. So extra 10,000 is there, no? That you reduce now. Already 40,000 has been reduced, so 10,000 more you reduce now. So after doing all these adjustment, you will get the PGBP income. This is called indirect method, and I have told you all these transactions because I don't want you to do silly mistake in the examination. Okay, you will know all the provisions, dear, but if you go to the examination hall and if you are not able to do this calculation properly, then learning all the entire provisions is a waste of time. Okay, so be thorough in this method as to how to calculate the PGBP income. Now let us come back to the computation provisions. Firstly, let us talk about deductions, and the first deduction that we are going to learn is section number 30. Section number 30 talks about rent, rates and taxes, repairs and insurance done to building. Insurance done to building. So who will get the expenditure deduction? The owner of the building will get the expense as deduction, or the tenant will get? Answer is whoever is spending the money will get the deduction. Let it be owner or let it be tenant. It does not matter. But what are the rules? Number 1, the building must be used for business. Building must be used for business. Rule number 2, if it is partly used for business or partly used for other purpose, then allow the proportionate expenditure in PGBP. Okay, the proportionate expenditure which relates to business will only be allowed under PGBP. Next, if it is a sublet premises. Sublet premises means what? If we take a building on rent and the same building we are giving to some other person on rent, this is called subletting or subtenancy. In such case, the net amount of rent, if it is positive amount, it will be taxable under PGBP. It will be deduction under PGBP. If it is negative, treat it as an income under PGBP. The net amount will be treated as income or expenditure as the case may be. Okay, if the rent received is more than the rent that is paid, then the net amount will be income. If the rent paid is more than the rent received, then the net amount will be considered as expense. Okay, now you cannot give rent to your own self. If you are paying rent to your own self, then it is not allowed as deduction under PGBP. Similarly, rent received from myself, okay, will not be considered as income under income from house property also. Next, partners premises. If a partnership firm is paying rent to the partner, then only reasonable rent will be allowed as deduction. Excessive rent will not be allowed as deduction. Next, if a capital expenditure is incurred, then increase the capital expenditure in the cost of the asset and you claim the depreciation on the enhanced cost. You cannot directly claim it as deduction. You get my point? However, if a tenant is making capital expenditure, he cannot claim deduction, correct? Then what to do? If a tenant is making a capital expenditure, that capital expenditure will be considered as deemed building, and on such deemed building he can claim depreciation. Okay, as usual. You get my point? Next, let us see section number 31. Section 31 speaks about repairs and insurance of plant and machinery and furniture. Repairs and insurance of plant and machinery and furniture. Sir, what about rent and rates and taxes? They are covered in section number 37. They are not covered here. Okay, so repairs and insurance of machinery, plant and furniture. Here also, as usual, only if the asset is used for business, it will be allowed as deduction. Next, if it is partly used for business and partly used for other purposes, then only the proportionate amount which is used for business will be allowed as deduction. Then, if it is a repair, okay, then renovation is only allowed as deduction. Replacement or reconstruction is considered as capital expenditure and hence not allowed as deduction. So what about capital expenditure? Since capital expenditure is not allowed as deduction, it can be added to the cost of the plant and machinery and on the added cost you can claim depreciation. You can claim depreciation. Fine. Now let us talk about the most biggest section in the PGBP chapter, that is depreciation. Section number 32 speaks about depreciation. To claim depreciation under the Income Tax Act, you have to satisfy three major conditions. What are the conditions? Condition number 1, assessee should be the owner of the asset. Condition number 2, the asset should be used for business or profession. And condition number 3, the asset should be a depreciable asset. Asset should be a depreciable asset. Now, for the owner, let us see a few points. First and foremost, lessor. In case of a lease transaction, let it be finance lease or operating lease, it does not matter. In a lease transaction, the lessor is only the owner of the asset, hence the lessor gets the benefit of depreciation. Next, if I am only having a part ownership in a building, then in my part only the depreciation is going to be allowed. Not only building, in any depreciable asset, if I am owning only a part of the asset, then only on my part I can claim depreciation. Next, building owner need not be the owner of the land. If the landowner is separate, building owner is separate, we are concerned only about the owner of building, because depreciation is only allowed on building, it is not allowed on the land. Okay. Next, depreciation is allowed even if the owner is not the user. Hence, even if my asset is given on hire or lease to someone else, still it will be considered as usage for the purpose of business and I will get the depreciation. Okay. Next, asset should be used for business or profession, and use includes passive use also. Even in the previous sections, deduction includes usage even if the usage is for passive use. What is passive use? Passive use means not actively using the asset. It means even if the asset is present in the business, it will be considered as usage. For example, fire extinguisher, tools and spares, and standby machinery, standby plant and machinery. Next, if an asset is used for partly business, partly other purpose, then allow the proportionate depreciation. Allow only the proportionate depreciation. However, only such proportionate depreciation should be reduced from the cost of the asset. Reduced from cost of the asset. So it means what? It means, for example, if you are having a plant and machinery of 1 lakh rupees, okay, and let's say building of 1 lakh rupees. So what is the depreciation? 10,000. Let's say the building only 40% is used for business. So how much is allowed depreciation? It is 4,000. Okay, this 4,000 only you should reduce from the cost of the asset. So 1 lakh minus 4,000 depreciation. Okay, what will be the closing WDV? It will be 96,000. You get my point? I hope you are clear. Now let us come to the third condition. Okay, and it is that asset should be a depreciable asset. The asset should be depreciable asset. Okay, now what is depreciable asset? Depreciable asset can be of two types. One is tangible asset and number 2 is intangible assets. There are three classes of tangible asset. Class number 1 is called building, class number 2 is called plant and machinery, and class number 3 is called furniture. So building, plant and machinery and furniture. Then class number 4, intangible asset itself, is class number 4, and intangible asset includes know-how, patent, copyright, trademark, license, franchisee, or any other business or commercial right of similar nature. Okay, not being goodwill of business or profession. Not being goodwill of business or profession. See Kanna, what is not a capital asset? Know-how, patent, copyright. What is an intangible asset? Sorry, what is an intangible asset? Know-how, patent, copyright, trademark, license, franchisee, or any other business or commercial right of similar nature, but not being goodwill of business or profession. Hence, goodwill of business or goodwill of profession will not be considered as intangible asset. Since it is not intangible asset, it is not a depreciable asset. Since it is not a depreciable asset, the assessee cannot claim depreciation on goodwill. Cannot claim depreciation of goodwill. This is a new provision. Okay. Now let us come to calculation of depreciation. How to calculate depreciation, Kanna? Firstly, you have to see what is the business of the assessee. Whether the assessee is engaged in the business of generation or generation and distribution of power. Okay. If at all the assessee is engaged in the business of generation or generation and distribution of power, then the assessee has an option to choose between straight line method and WDV method. Straight line and WDV. All the other assessees have to compulsorily choose only WDV method, written down value method. Now in straight line method, it is a separate asset system, which means it is a normal system. Depreciation is calculated for each and every asset separately. Okay, then how to calculate depreciation? Very simple. Depreciation is equal to depreciation rate into actual cost multiplied by actual cost. Okay, however, since straight line method is not a very popular method, that is why the depreciation rate you need not memorize. The institute will give it to you in the question itself. Institute will give in the question itself. Now let's come to WDV method. In WDV method, what system is followed? Answer is block of asset system is followed. Block of asset system. Sir, what is this block of asset system? Block of asset means all the asset belonging to a same class and same rate. Same class and same rate. What is class? Class we have already seen. There are 4 classes of asset. What are the 4 classes? Building, plant and machinery, furniture and intangible assets. So there are 4 classes. Now let's come to what is the rate of depreciation for WDV method. Rate of depreciation for WDV method, let us study. Firstly, let us talk about building. The rate of depreciation for building used for residential purpose but other than hotel or boarding house is how much? 5%. Then what about not for residential purpose? If it is not used for residential purpose, which means what? It is used for commercial purpose, then the rate of depreciation is 10%, and for hotel and boarding house also rate of depreciation is what? 10%. Next, if the building is used for a water supply project or water treatment system, or if the building is any temporary erection, then in such case the rate of depreciation is 40%. Next class, for furniture, and furniture includes electrical fittings, okay, wiring, switches, etc. are also included in furniture. So what is rate of depreciation for furniture? It is 10%. Next, for plant and machinery, the general rate of depreciation is 15%. General rate is what? 15%. However, if a plant and machinery is a motor car, in such case the rate of depreciation is 15%. But if the motor car was purchased and used between 23rd of August 2019 till 31st of March 2020, then on such car alone the rate of depreciation is how much? 30%. Next, let us talk about motor vehicles given on hire. So if a motor vehicle, which means what? Motor car, then tempo, truck, lorry, etc. whatever it may be, if it is given on hire, then normally the rate of depreciation is how much? 30%. However, if the motor vehicle was acquired and used between 23rd of August 2019 till 31st of March 2020, then the rate of depreciation is 45%. 45%. And this higher rate of depreciation is there, no? For this 23rd of August till 31st of March, this is not only in the first year. For each and every year, this higher rate of depreciation is allowed as deduction. Okay. Next, for ships and boats, the rate of depreciation is 20%. For molds that are used in rubber factory or plastic goods factory, it is 30%. For semiconductor industry, plant and machinery, rate of depreciation is 30%. For a computer, and computer not only includes computer includes scanner, software, laptop, printer, CPU, okay, mouse, keyboard, everything is included in the meaning of computer. So for the computer, rate of depreciation is 40%. For life-saving medical equipment also it is 40%. For pollution control equipment it is 40%. For windmill or generator on wind energy it is 40%. For aeroplane or aero engine also it is 40%. Then for a water supply project or water treatment system, if it is a building also 40%, if it is a plant and machinery also 40%. Then books are also covered in the meaning of plant and machinery, and that is why rate of depreciation is 40%. Now let's come to intangible asset. So class 4 is intangible asset. Rate of depreciation for intangible asset is 25%. Now listen very carefully, Gana. See, there is computer, okay, and there is books. Can computer and books, both of them together, come in a single block? Answer is yes. because computer is also plant and machinery at 40% depreciation. Book is also plant and machinery at 40% depreciation. So both are considered a single block. Add all of them together and find the depreciation separately. Okay, now let me ask you one more question. Can commercial building and furniture be considered as same block? See, furniture is there and then commercial building is there. Depreciation on furniture is how much? 10%. Depreciation on commercial building is how much? 10%. Now can both of them be combined into a same block? Answer is no, because furniture is a different class and building is a different class. So class also should be same, depreciation rate also should be same. If both are same, all the assets can be combined to a single block and find out the depreciation only for the block of the asset. Block of the asset. Okay, one second. Now see, listen. See Kana, depreciation is mandatory. Depreciation is mandatory. So whether or not you claim depreciation as deduction, you definitely have to reduce the value of depreciation from the WDV of the fixed asset year after year. I told you that while calculating presumptive income, we do not get the benefit of depreciation deduction because all the deductions are deemed to be allowed. Then in such case, should we reduce the value of fixed asset? Answer is yes. Okay. Next, no depreciation is given on land and no depreciation is given on goodwill of business or profession because both are considered to be appreciating and not depreciating. Okay, this third line is there. If at all this is there in the material, please cut it. Next, what about plant? What is the meaning of plant? Plant includes, it means generally what you are thinking as plant and machinery, that is definitely plant and machinery. Apart from that, ships, books, vehicles, okay, scientific apparatus, surgical equipment is also plant and machinery. However, plant and machinery does not include tea bushes, livestock, building, furniture, animals, human body and stock. So what is included? Ships, books, vehicles, scientific apparatus and surgical equipment is included. What is not included? Tea bushes, livestock, building, furniture, animals, human body and stock not included. Building also, what generally you consider as building, that is definitely building. Apart from that, road is also considered as building, bridges also considered as building, culverts, wells and tubes. So all of these are also considered as building. Okay, and after that also, if a capital expenditure is incurred by tenant, that is also considered as deemed building, which I already told you. Okay, now see, goodwill of business or profession is not eligible for depreciation from previous year 2021 onwards. That is from 1/4/2020, assessee cannot claim depreciation on goodwill of business or profession. Okay, now let's come back to the chart. See, what did I tell you? What is a block of asset? Block of asset means all the assets of a same class and same rate. So now how to calculate the depreciation? Depreciation is equal to depreciation rate multiplied by actual cost. Depreciation rate into actual cost or WDV as the case may be. So first year means you have to put the rate on the actual cost. After the first year you have to put the rate on the WDV. Fine. That is the depreciation. We have discussed in detail what is the depreciation rate. Now let us discuss what is actual cost. Actual cost. So what is actual cost, Kanna? Number one second. Any amount paid to purchase the asset will be called actual cost. Correct? Purchase price is only generally actual cost. Apart from that, see, listen. Trial run expenditure. If any trial run is done on the capital asset, then increase the value of trial run expenditure on the actual cost, reduce the value of trial run income from the actual cost. Then if there are taxes paid on that particular asset and if no credit is available, then include it in the cost. Fine. I told you if GST credit is available, don't include it. If credit is not available, include it in the cost. Next, if interest is paid on the loan for taking the fixed asset. So if for buying that depreciable asset, if you have taken a loan, then the interest that you pay on the loan should be added to the value of the depreciable asset till that asset is put to use. So till the asset is put to use, add the interest to the cost. After the asset is put to use, claim the interest as deduction. claim the interest as deduction. Next, if there is any subsidy received from the government or any other person, then reduce it from the value of the cost. Reduce it from the value of cost. One more thing, if at all you are receiving subsidy for multiple assets together, then proportionately reduce the value of all the assets. Okay. Next, if any payment, okay, is made to a person in a day exceeding 10,000 rupees in any mode other than account pay check, account pay bank draft, electronic clearing system, or any other prescribed modes. What is this any other prescribed modes? Any other prescribed modes means, listen, any other prescribed mode means credit card, debit card, net banking, IMPS, UPI, RTGS, NEFT, and Bhim Aadhaar Pay. So, in what and all payment modes is accepted? If a payment is made over 10,000, exact 10,000 not counted, only if it is exceeding 10,000 you have to check. Okay, if it is up to 10,000 it is allowed Kanna. If it is exceeding 10,000, then if the payment is made to a person in a day in any mode other than account pay check, account pay bank draft, or electronic clearing system, or any other prescribed mode, then such payment should not be included in the cost of the asset. You get my point? So by doing all these transactions calculation, you will find out the value of the actual cost. On this actual cost value only you have to find out the depreciation. Now there are some special cases also which are relating to actual cost. Let us see those special cases quickly. First special case, okay, asset is used for business after it is used for scientific research. So after using for scientific research, if you are converting the scientific research asset into business, then the actual cost will be reduced by the scientific research deduction claimed. So basically if you claimed a deduction of 100 lakhs on the assets whose value was 100 lakhs, then the cost of the asset will become 0. Okay. Next, inventory converted into capital asset and used for business or profession. So if I converted my stock into my capital asset, in such case the fair market value on the date of conversion will be considered as the cost of the capital asset. However, the difference between the cost and the fair market value will be considered as PGBP income. So for example, if I am having a building and I am a builder, so for a builder, building is a stock, correct? So I have constructed this building for 80 lakh rupees. However, now I am converting this building into my capital asset for 1 crore, because the fair market value was how much? 1 crore. Hence 1 crore will be considered as the cost of the capital asset. However, the difference between this 1 crore and 80 lakhs, that is 20 lakhs, will be considered as my PGBP income. PGBP income. Next, asset is acquired by way of gift or will or inheritance. So if asset is received by gift or inheritance, in such case the cost will be the cost of the previous owner minus the depreciation that would have been allowable. Okay, would have been allowable to the assessee as if the asset was the only asset in the relevant block of asset. So firstly take the cost of the previous owner. Okay, for example it is 1 crore, then take the cost as 1 crore, then reduce the depreciation that would have been allowed every year. Then after that whatever value you get will be the cost for your business, will be the cost of capital asset. However, if you are also incurring any expenditure, let's say any expenditure for freight or installation, for example 2 lakhs, then that also should be included in the cost. So if you are receiving any asset by way of gift or inheritance, then the cost is the cost of previous owner minus the depreciation that would have been allowed. And also if an assessee is spending his own money for the purpose of freight or installation etc., then also he can add it to the cost. Next, second hand asset. Second hand asset, I told you in class that when I am purchasing a second hand asset I can do a fraud. Okay, so that is why what will happen, the assessing officer is having the power. So for example, if I am purchasing a second hand asset for 50 lakh rupees, but the assessing officer thinks that the value of the asset is only 10 lakh rupees. So what he will do, he will take permission from the joint commissioner and he will change the value of the asset from 50 lakhs to 10 lakhs if he thinks that I am doing a fraud. Okay. So assessing officer is having the power with the permission of joint commissioner. Now let us see reacquisition of asset. Reacquisition of asset means what? I am selling my own asset and then buying it back from the person from whom I have sold. For example, I sold an asset of WDV 2 lakh rupees and I sold it for 2 lakhs and I bought it back for 10 lakhs. So now can I start claiming depreciation on 10 lakh rupees, which is my purchase price? Answer is no, because this section is telling that 10 lakhs or 2 lakhs, whichever is lower, will be considered as my cost. So what is given? Actual cost will be the actual cost when he first acquired minus the depreciation allowable, or the actual price for which the asset is reacquired, whichever is less. Okay, so in my case 2 lakhs or 10 lakhs, my existing WDV, or 10 lakh rupees, the price for which I have purchased, whichever is lower, will be considered as my cost. Okay, next, acquisition of asset previously owned by any person to whom such asset is given or on lease or hire or otherwise. See now, listen. Now there is a person B who has sold an asset to person A for 55,000 and then got it back for lease. Got it back for lease from A. Okay. However, in the hands of B, the WDV of that asset was 50,000. WDV was 50,000. So in the hands of A, now what is going to be the cost? A is who? New owner. A is the new owner of the asset. Now the cost in the hands of A will be 50,000, which is what? WDV in the hands of B. Okay, listen one more time. If B is giving an asset to A and then the same asset he has got on lease from A. So now who is the new owner? A is the new owner. Okay. So what will be the cost in the hands of A? Answer is cost in the hands of A will be WDV in the hands of B, which is 50,000. You get my point? That is the answer. Now let us come to next provision. Building previously the property of an assessee. So if I am having a building which is an old building and now I have started using the building for the purpose of my business, then will it become a depreciable asset? Answer is yes. So now what will be the cost of such building? Answer is cost of the building will be the cost to purchase the building minus the depreciation that would have been allowed otherwise. So what I will do, if I had purchased the building in 1819, then reduce the depreciation for 1819, 1920 and 2021. So what is the balance amount? That is 72.9. This only will be considered as the cost of the building in my business in previous year 21-22. You get my point? Like this similar provision only we studied for asset received as gift or inheritance. Okay, similar provision. But listen very carefully. This provision is there, no? This is applicable only for building. It is not applicable for any other asset. Hence, we have seen a question also. For example, I am having a car of 5,25,000 and I purchased this car 3 years back. Now, in the current year, previous year 21-22, I am bringing this car into my business. So, what will be the cost of the car? The cost of the car will be 5,25,000 only, as usual. So, for building only, you need to do this special calculation. For other than building, you need not do this special calculation. Next, let us come to capitalization of interest paid. This we have already seen. Then this one also we have already seen. Subsidy also we have already seen. Next, any asset is acquired outside India by an assessee being a non-resident and such asset is brought by him to India. So for example, this provision is there, no? This is same as the building provision. So for example, if I am a non-resident and I am having an asset outside India, now I want to use that asset in the business in India. That is why I imported that asset. I took that asset from outside India and brought it to India. In such case, what will be the cost of the asset? Answer is the cost of the asset will be the actual cost minus depreciation that would have been allowed. Same as building. So I have to see for how much I had purchased that plant and machinery or the asset. For example, there is a plant and machinery which I am bringing to India and starting to use for the purpose of business. And let's say it cost 1 crore. Okay, then I have to reduce the depreciation in the respective years from the year of purchase till the current year, and then what is the remaining value, that only I can take it as the cost in my business. Okay, I hope you are clear. Next, capital asset on which deduction is allowable under section 35 AD. So if in 35 AD deduction is already allowed for a capital asset, then cost of such asset in the business is going to be nil. Cost of asset is going to be nil. Now what if within 8 years itself a capital asset is transferred from specified business under 35 AD to a non-specified business? If an asset is transferred from specified business to a non-specified business, then what will happen? Then the cost of such asset will be the actual cost minus depreciation that would have been allowed in the business. So this is also similar to that NRI calculation, okay, and building calculation. So what I should do, if there is an asset which I used for 35 AD specified business, and within 8 years if I am converting that asset to a normal business or non-specified business, in such case the cost of asset is going to be the actual cost minus depreciation that would have been allowed in the past years. So the net amount will become my cost. I hope you are clear with all these provisions of actual cost. Now let's come back to PGBP chapter. Okay, see, listen. Now let's come back to the chart of depreciation. See, in depreciation we learned in WDV method what is depreciation? The depreciation rate into the actual cost or WDV as the case may be. So now we have discussed in detail about the rate and we have discussed in detail about the cost. Now what will happen if all the assets cease to exist, or the selling price of the block is more than the value of the block? Selling price of an asset is more than the value of the block. In such case, okay, listen. Okay, I'll repeat it once again. In case of depreciable asset, if the entire block of value is no more, all the assets are either sold or destroyed or anything has happened to the assets, so now assets are no more, or if the selling price of an asset or a group of asset is more than the value of the block itself, in such case capital gains will arise. This capital gains we are going to revise in the capital gain chapter. Similarly, in SLM method also either terminal depreciation or balancing charge or capital gain can arise, that we will be discussing in the capital gain chapter. Now let us see the concept of 180 days. So in depreciation, as per income tax, we do not calculate proportionate depreciation for the number of days it is used. We only do 180 days concept. It means what? If an asset is used for less than 180 days in the year of purchase, then half rate of depreciation. If the asset is used for 180 days or more, then full rate of depreciation. Very simple. So depreciation can either be half rate or full rate. If the asset is used for 180 days or more, full rate of depreciation. If the asset is used for less than 180 days in the year of purchase, then what? Half rate of depreciation. Okay, and be very careful. I have given it here in the year of purchase. So for example, see, listen Kanna, if I have purchased a furniture in 31st of March, which is what? Previous year 2021. 31st of March 2021, which is previous year 2021, and then I have started using the furniture only on 1st of November in the year 21-22. So in the previous year I purchased, okay, and during 21-22 I have used it for less than 180 days. So in such case, what will be the rate of depreciation? Answer is, the rate of depreciation will be the full rate of depreciation, that is 10%. You get my point? So here don't get confused. Only in the same year if I am purchasing and using for less than 180 days, in such case half rate of depreciation. If I bought in the previous years itself and in the current year I am using it for less than 180 days, in such case full rate of depreciation. So here what? Full rate. Okay, if you want you can pause the video, see this example, you will be getting an idea. Okay, next. Now let's come to other concepts in depreciation and let us discuss additional depreciation. What is additional depreciation? See Kanna, first and foremost, the concept of additional depreciation is only allowed for WDV method. Okay, in straight line method, no additional depreciation is allowed. And one more thing, it is not allowed for any assessee who is opting for the new tax regime under section 115 BAC. Only for old tax regime it is applicable. Okay, and I am going to speak only about 20% additional depreciation, this 35% additional depreciation, and one more section, that is 32 AD investment allowance. So this is not so important provision, so hence you can read it once from the notes, but for exam point of view, since it is not so important, I am not revising. But does it mean that you should skip it? Answer is no. Definitely don't skip it, see it at least one time and go, so that if at all a theory question is asked, you can answer it. Okay, now how to calculate additional depreciation? First and foremost, if the conditions are satisfied and if the asset is not covered in the exception, then you can claim additional depreciation of 20%. Okay, what are the condition? Number 1, the asset should be a new plant and machinery. Asset should be new plant and machinery. Number 2, assessee should be engaged in business of manufacture or production or generation, transmission or distribution of power. Okay, and manufacture includes printing and publishing. So what is the first condition? The asset should be a new plant and machinery. So for old plant and machinery, is additional depreciation allowed? Answer is no. For any asset other than plant and machinery, let's say building or furniture, is additional depreciation allowed? Answer is no. Okay, that is the first point you have to note. And then next point is that assessee should definitely be engaged in manufacturing or production or generation or transmission or distribution of power or printing and publishing. Only for these businesses additional depreciation is allowed. If not, it is not allowed. Now what are the exception? Exception number 1, additional depreciation is not allowed for ship or aircraft. Number 2, it is not allowed for a used plant and machinery, only allowed for new plant and machinery. Number 3, it is not allowed if the plant and machinery is installed in the office premises or residential accommodation or guest house. Number 4, no additional depreciation for office appliances. Next, no additional depreciation for road transport vehicle. And last but not the least, any plant and machinery for which the entire cost is already allowed as deduction, for example under section 35 or 35 AD, then in such case no additional depreciation for such plant and machinery. I already told you, Income Tax Act gives benefit only one time for one amount. Okay, so if already deduction has been claimed in any other section like 35 or 35 AD, then on such asset depreciation or additional depreciation cannot be claimed. Additional depreciation cannot be claimed. Can depreciation be claimed? No, depreciation also will not be claimed because the cost of the asset is going to become zero. We already learnt in actual cost concept. Fine. So this is the concept of additional depreciation. In additional depreciation also 180 days concept applies Karna. If the asset is used for less than 180 days in the year of purchase, provide half additional depreciation, that is 10% in the first year, and give remaining half, that is remaining 10% in the next year. Okay. However, if the asset is used for 180 days or more, provide the full depreciation in the first year itself. You get my point? Now, one more point. Additional depreciation is allowed only once. So this 20% extra is there, no? This can be claimed only in the first year. It is not going to be given year after year. It is given only one time. Fine. So that you be careful. Now let us see what happens to depreciation in case of succession. So if there is succession, what is succession Karna? Succession means if a firm or sole proprietorship has become a company, or if a private company or unlisted public company has become a LLP, or there is an amalgamation or demerger. These are the 4 cases of succession. So if a succession has happened, then what to do? Calculate the depreciation as if no succession has happened. First calculate the depreciation in the normal way and then distribute the depreciation between the predecessor and successor based on the number of days actually used. Based on the number of days actually used by them. Okay, very simple. Now let's come to hire purchase system. Hire purchase system. So there are two types of system. One is installment system and one is hire purchase system. Installment system means what? Ownership is transferred in the first installment itself. In such case, what to do? In such case, treat it as a normal transaction. The entire amount, that is the sum total of all the installments put together, will be considered as cost of the asset and start claiming depreciation from the first year itself. Okay. Next, what about hire purchase system? Hire purchase system is the system in which the ownership is transferred in the last installment. In such case, what you have to do? We have to take two components. One is depreciation and one is hire purchase deduction. How to calculate depreciation? Easy, Kanna. What? Take the purchase price. What is the purchase price? Value of asset on the agreement date. So for example, if I am buying a car worth rupees 2 lakhs, I am buying a car worth rupees 2 lakhs. Fine. However, I am paying an installment of 10,000 for 24 months to buy that car. 10,000 rupees as installment for 24 months to buy that car for 2 years. Now what to do? See, listen, this 2 lakh rupees will be considered as the value of the car, and on the 2 lakh rupees car value, I can start claiming the depreciation from the first year itself. Okay. Then what about hire purchase deduction? Okay. Hire purchase deduction is very simple. Put the total 2,40,000, okay, into number of years. See, what is the sum total of all the installments? 2,40,000 minus value of asset. What is the value of asset? 2 lakh rupees divided by number of years. So for 2 years, if an hire purchase is done, take the number of years. So you will get the amount, that is 20,000. 20,000 is the value of hire purchase deduction. You get my point? So very simple. What is hire purchase deduction? Sum of installments minus value of asset as on agreement date divided by number of years of agreement. Very simple. Now let's come to method to calculate the depreciation. What is the method of calculating depreciation? Very simple, Kanna. First and foremost, take the opening WDV, then add additions during the year and then reduce the sale during the year. You will find the net amount. This net amount is there, no? You divide into three parts. Part number 1, asset not put to use. Then part number 2, asset purchased and put to use for less than 180 days during the previous year. And also, if at all there is a sale which is happening out of less than 180-day purchase, that you reduce here itself. Okay. Generally, this is not given for interlevel, but still if it is given, you reduce it here itself. On this value, you provide half depreciation, and on the balance value, you provide full depreciation. You get my point? So divide into three parts. Number 1, not put to use. Not put to use means no depreciation. Then part number 2, put to use for less than 180 days in the year of purchase. So for that you have to provide half depreciation, and for the balancing amount you have to provide full depreciation. So add all of this together, you will get the total depreciation. Reduce total depreciation from the cost of the asset. Then also, if it is a new plant and machinery for an assessee who is engaged in manufacture, etc., then reduce the additional depreciation also from the cost of the asset. You get my point? So this is the method of calculating depreciation. After reducing depreciation, you will get the closing WDV. The remaining concepts we will discuss in part 2 and part 3 of the revision lecture series for PGBP. See you then, dear. Till then, take care. Bye bye.